It's that time of year where the world's greatest investors are required to update you, the public, on what they own, what have they been buying and selling. Now, there is a little bit of a lag, but we do know what some of the greatest investors were doing as of the second quarter, as of June 30th, 2024, to see if there's some potentially compelling ideas for us to consider. If you enjoy educational investment videos, you're watching Unrivaled Investing. My name is Daniel. Let's dive right in to understand one of the greatest investors of all time, Warren Buffett, his portfolio, starting with Berkshire Hathaway. And I think it's important to call out this investment portfolio, $280 billion. He has a cash balance of around the same amount. So I would say that isn't exactly a strong endorsement that he's finding tons of compelling values. If anything, it might suggest, hey, he's a little more cautious. And, from SEC filings, we know that not only was he selling Apple during the quarter, but he also, subsequent to the second quarter, he was cutting his Bank of America stake. That cut in Apple is very significant, reducing the stake by nearly half. I discussed one of the key reasons that I suspect Buffett may have sold Apple in a recent video on Google in terms of the risks that Department of Justice is looking to break it up and the recent lawsuits that have proceeded. Looking at the activity of Berkshire, I'm looking for compelling ideas to buy. I see Chubb Limited, which I think is, kind of interesting. It's an insurance play. I think there are, frankly, better insurance plays out there. I've called Fairfax regularly. Fairfax's results not only are better, but the stock trades at a cheaper valuation. But I think that comes due to the fact that in this environment, if you think interest rates are going to be higher for longer, insurance companies that are well managed could be a very compelling asset. And that is something that I think a lot of people weren't, if you've been conditioned in a low interest rate environment, you're not really thinking about, how these business models work, because the insurance business model is just, it's a thing of beauty. And that's the reason why that's where Buffett originally, put his focus with insurance companies. So interesting to see him buying a little bit more Chubb in the second quarter. I do see a bet on Ulta as well as Heiko. I suspect these smaller bets might be from his lieutenants, Todd Combs or Ted Weschler. I am curious a little about Ulta. So several members of the Unrivaled Investing community have asked me about it, so I might do a subsequent video. So knowing nothing about it, this is a leading beauty retailer in the United States. I'm going to AI Ticker Chat to get a quick download on, what do they do? What's the potential? So not only do they offer beauty products, they also have a range of salon services, haircuts, coloring, styling. And it must be trading at a reasonable or low valuation based on actual historic results, because AI Ticker Chat's predict feature, which is one of the premium features, is suggesting that, hey, there could be 100 to 200% upside if they execute in the years ahead. This is a hypothetical scenario. So I'm going to bump up Ulta on my list to dig in, because this initial look from AI to sort of say, what do they do and what's the potential in the years ahead? Also, by the way, as I've mentioned before with AI Ticker Chat, the chat feature is now completely free to use. So for any US company that you're interested in, feel free to chat. We also have a chat and win or share and win contest. If you're interested, you can see the link below. By the way, with these SEC filings, it is worth calling out that, if an investor has foreign holdings or short positions, you're not going to be seeing that for the most part. And so, you're primarily just seeing what do they own on a long perspective. So next up, Prem Watsa. I was just mentioning Fairfax, which I do own. I've talked about it at length with my subscribers. They primarily have a commodities portfolio, 50%, let's say, is in commodities between oil and gas. And I think this is a similar case to Buffett, where, their equity portfolio, and keep in mind, Fairfax is compounded at like 18, 19% for decades. So fantastic track record. But their portfolio, their publicly traded stock portfolio, is only around $1 billion. They have a total of a $67 billion investment portfolio. So similar to Buffett, I would say it's even less of an endorsement for public stocks looking at Fairfax. So the original value investors are saying, man, not seeing a lot of value in the markets. Looking at Michael Burry, another prominent value investor, I think it's the same story. Once again, I mean, his net worth is hundreds of millions of dollars. At least that's what's estimated. And then I imagine he has outside investors that did really well from, the GFC, when he was managing Scion Capital originally. So I imagine his assets under management could easily be billions of dollars. Yet this reported value is only $50 million. I mean, truthfully, if that were all that he were managing, he wouldn't even have to file. It's because it's over 100 million for sure that he is, filing. So this means either sizable cash or, foreign stocks. Given his stake in BABA, there's a good chance that he has some sizable, foreign stocks, and that's 20% of this portfolio. Shift 4 payments, that's a recent new position for him. That actually put a big smile on my face, because for the last, few months, I've actually been calling out to my subscribers at Unrivaled Investing that was one of the positions I've been adding to, Shift 4, and I just wrote more about it in this week's letter. So if you're interested in learning more about it, the founder, the setup, the story, come check that out if you're interested. I do see he did make some other bets, Hudson Pacific, Olaplex. I did cover Olaplex a while ago, I think. So these are some smaller bets. He has a nose for sniffing out value. So I'm always very curious, where is he seeing value? So with Olaplex, this is a beauty industry player focusing on the hair care segment with a direct-to-consumer offering. The problem is, and I'm with investing, it's about turning over rocks. Seeing, like, just turn over as many rocks as you can, and when you see something and it's like check, it checks the boxes real fast, then you want to dive in. And if you're just tossing rocks over and over, you will find some things that smell good. But part of that is knowing your own investment journey. And so for me personally, when I see the fundamentals for Olaplex and that it declined by 30% plus and Wall Street expectations are effectively flat, that means to me that, it's not something that I'm looking to make it part of my journey. I'm looking for things that, hey, it's obvious that you're winning, not that, you might be, there might, the cigar butt of investing, like there's one last puff of this cigar. And even if it's maybe the business model, maybe the stock fell even more than the fundamentals warranted, but the fundamentals were crappy. Like, I'm just not interested in situations like that. So I'm, even though Burry bought this and it's a small position, I'm probably not going to dig in further. Looking at Bill Ackman's portfolio with Pershing Square, interesting to see, just a few quarters ago, he was talking about how he thought Google was super compelling. He's been cutting across the board. Some of these holdings are just super expensive, like Chipotle. I called that out previously. Interesting to see him buy Brookfield. I owned Brookfield in the past. I did a video on it. Personally, I thought the structure and some of the deals were a little murky, a little tricky. So you can see some, it's tough to get your head around some of that stuff there. But look, if you can and you fully understand their financials, good for you. And I hope it works out. I mean, Brookfield shareholders have done quite well over time. I've sort of been in and out of it just because it didn't do it for me. The complexity was too hard for me. It is interesting to see him putting his toe in with Nike. I did a prior video asking if Nike was deep value. My end conclusion was probably not. Their recent lack of sales growth does reflect that there is tougher competition. And so I would be more interested in exploring the competitors, the Hokas, the On Holdings that clearly are taking share. And those are the publicly traded, or Hoka, I think, is owned by Deckers. So those are the companies I would, be more interested in exploring. As always, this is not financial advice. I mentioned Google earlier. I do own shares in Google. It's a small stake. I also own shares in Fairfax. Also, quick plug, recently a premium member of the Unrivaled Investing community shared the following. This is a direct quote. I got introduced to the markets as a speculator during the 2020-2021 bubble. Your content really helped me understand long-term investing. Most of the online friends I made during the bubble are still speculating. I'm trying to convince them to join your membership. The unrealized profits, and he mentions a couple of companies that I've called out, is enough to cover 302 years of membership. So if you're looking for compelling ideas, come check out Unrivaled Investing. Looking at Monish P, who's talked about cloning and, looking at what some of the great investors have done. He has this portfolio of coal companies. I did a prior video on one of them, and truthfully, it's just too hard for me. I don't like owning commodity companies. I'd rather find those, companies that are either toll booths on the economy or they can easily pass on pricing, and coal companies just are too hard, even if they are quite cheap. So it doesn't surprise me if it works out real well for him. Similar to other investors, though, I suspect he has a sizable international portfolio that you do not see here with PAB Investments. Pat Dorsey, who literally wrote a book on value investing, literally wrote a book on how to identify competitive advantages, which I really enjoyed. I think it's called The Little Book. Maybe that builds value. It's one of those little book series by Pat by Pat Dorsey. He's a former head of research for Morningstar. And so I like the framework that he provided for thinking about competitive advantages. It really comes down to, I believe, 4, which is, it's switching costs, some sort of brand, some sort of intangible asset, network effects. So I think, he does a really good job sort of boiling it down to, hey, what are these competitive advantages? But I think it's always important. I personally have evolved as an investor. Previously, I was like, okay, I need to know the competitive advantages. The competitive advantages need to translate into the fundamentals. And if you see the fundamentals, then oftentimes you go, okay, what's the competitive advantages that are driving that? But if you see a business that's stagnating and you're like, oh, it's got, fundamentals, it got competitive advantages up the wazoo, it's less compelling for me. I mean, you can maybe make the case that the business is durable, but, what are the drivers of a return? It comes down to the growth of the fundamentals, the valuation, and the cash flow to shareholders. So those are the things that investors need to think about. So, but looking at what Pat Dorsey's done, he manages around $1 billion portfolio, trimming across the board. So maybe he's had some redemptions. AutoZone, that's a long-term compounder. He increased his stake. Sprout Social, that's a new buy, it looks like, which is kind of interesting to see. I don't know anything about Sprout, so I want to dig into it. I see that it's a provider of social media management software, something I've spent no time digging into. Perhaps I should, given, that I run Unrivaled Investing, social media software. Looking at the fundamentals, though, I mean, like, whoa, like going from 100 million in revenue to what's expectations from Wall Street of 400 million, they're clearly creating value for their customers and crushing it, and around 70-80% gross margin. So even if they're unprofitable, very likely they could be profitable in the future. This growth does suggest they're doing something right. I'm not sure exactly who the right competitors are or comps that I should be using. I go to AI Ticker Chat to, play around with the different comps, and I see that other software CRM players, trade around 7 to 12 times sales, whereas they trade around 5 times. So this might be another company. I said Ulta is going to get bumped up. Sprout Social might be another one that gets bumped up the list just because the valuation might be compelling, especially given that it's outgrowing these same players that it's trading at these players are trading at a much higher multiple, different businesses, but, worth understanding. Stanley Druckenmiller, man, holy moly. He is just an incredible trader. So you have to take what he does with a grain of salt, because it could be, it can dramatically change, but, he did 30% for 30 years. I don't think anyone else is as good. And more recently, he had this bet on Nvidia, and he completely nailed it. Like, he made it one of his top positions. Like, he may even did calls on it. And so when he makes a top position, I think it is worth digging in, certainly just to explore, to be curious, because, he's one of the greatest of all time. And it is interesting to see that he's bumped up this Coherent, this industrials company, COHR. I don't know anything about this company. So once again, I'm going to turn to AI Ticker Chat just to take a quick look. And so it's a vertically integrated manufacturing company specializing in engineered materials, optoelectronic components, and laser technologies. So when I hear a thesis like that, it sounds like a diversified industrial player. It means to me that you need to have a very specific thesis for what's going to be driving you, in the periods ahead. And so I go to the growth button, to see, what is management called out. And interestingly enough, they're calling out how the optical transceiver technology is crucial for the high-speed connectivity in AI data centers. So he's made a big bet, and he cashed out at the top for Nvidia, and I think he's looking at another AI play here, this time on the another infrastructure play, potentially with Coherent, COHR, so that, I'm going to be digging into in the future, and so these are just some of the ideas that some of the top holders, top investors have reported. If you have, some ideas that you've seen that jumped out, I'd absolutely love to hear it in the comments below. I hope this video has been helpful for you. If so, I appreciate that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.